Well, the dollar was actually trading below 105 before the CPI data came out at 11:30, and then it promptly went back above 105 and stayed there for the rest of the day. You'd think that if anything, zero change to prices in the December quarter would mean a rate cut is more likely next February. But in fact, a lot of market economists said now that there won't be one until March, which I guess is why the dollar ticked up. Inflation is being held down by falling food prices as fruit and veggies return to normal after the floods. What this chart suggests is that they probably have further to fall to get back to trend. And here's a chart of headline and underlying inflation, which is an average of the various measures that economic boffins use to confuse everybody so they can earn the big bucks. But core or underlying inflation is what the Reserve Bank watches, and as the chart shows, it is, as predicted, bang in the middle of its target range of 2 to 3%. Headline inflation, which is what we actually have to pay for, was more than 3%. The share market put on 1% today, thanks to some very strong rises among the banks. Westpac jumped 3.5%, Commonwealth 2.5%. By comparison, the big miners were relatively subdued, but BHP still went up nearly 1%. In other words, investors took absolutely no notice of the IMF's cut to its global growth forecasts and its general deepening pessimism. What would they know? The US market was flat last night, but things are getting decidedly shaky in Athens, where share prices dropped more than 5% last night. The Japanese market went up more than ours. And that's finance.